Hi, welcome to our weekly real estate video. I am Victoria Goodwin, Realtor with Weikert City to Shore.
And I'm Ann Basmajian, also with Weikert City to Shore.
Welcome, and today we have one of our lenders with us, Mr. Doug Miller with...
Hello, I'm with the Spire Home Mortgage in North Wildwood.
And we are going to discuss the FHA 203K loan. Very excited to learn more about this today.
Yeah. And you said it's becoming more popular?
I don't know if it's more popular, but they're really good loans.
Mm-hmm.
They allow people to purchase a home and then acquire additional funding to do renovations for the house.
Okay, all right. And are there, so there's different types of these, you were saying?
Yeah, there's the way the 203K loan works is that FHA will approve you for a mortgage that will acquire a property with a set purchase price, and then the borrower will then work with a local contractor of their choosing to come up with a list of renovations that they want to do to the home, whether it be replace the septic system, put an addition on the house, replace the windows, install a new well, renovate a kitchen, renovate a bathroom, anything that they feel they want to do to the property, that this loan will then give them the funding to do so.
Wow, gotcha. And then there's two different types of those loans.
There
right?
are. There's the standard 203K. That's a loan where the standard is you have to go out and hire a 203K consultant. These are individuals that are like home inspectors that HUD has approved. The consultant works with your local contractor that you've chosen to do the work to make sure that the contractor's bid makes sense, that it is not, that there's enough money there to complete the work that's being proposed, and then approve the work for the contractor. And the HUD consultant will also come back and do all the inspections on the property to make sure that the work that's being done is sufficient and adequate to what's being asked to do.
Okay.
Gotcha.
Yeah, sounds amazing.
Yeah, they're great. The second type of 203K is the limited 203K. That's a loan where it's the renovations do not exceed $35,000.
Okay.
The renovations do not structurally impact the property, so they're not moving walls or putting on additions. It's really more for purely cosmetic things. If you want to replace a kitchen, replace a bathroom, install new windows, replace a septic system, you can do that under the limited program.
How about electrical or plumbing? Just in the scope of cosmetic, or?
Electrical and plumbing is not structural, so you could do that under limited.
Okay.
But if the minute you're moving a wall or reshaping a room or something, then it would probably float over to a standard.
Okay, gotcha. Nice.
So the way you put them together is you have your sales price in the ground, and then you have the cost of your renovations. You add those two things together, and that becomes your de facto purchase price.
And then with the limited, you don't have to hire a consultant.
You do not have to hire a consultant for the limited.
So how does that work with inspections and?
Well, on the 203K limited, what will happen is the bank will fund 50% of the job at closing. And then the balance will be funded once the work is completed, and they would send the appraiser back out to appraise the property to make sure it's been finished.
Okay.
Okay. All right. And that's under $35,000.
That is under $35,000. We do a lot of those. We do a lot of those, especially down here on properties for septics.
Right.
Specifically for
sense.
septics.
Okay.
Yeah.
Wonderful. All right. Next question. Are there any special credit requirements?
There are no special credit requirements. If you qualify for a regular FHA loan credit-wise, then you would qualify for a 203K. There's no additional add-ons or overlays for credit score regarding those types of loans.
And what about a down payment?
Down payment is calculated the same way you would calculate a down payment for a regular FHA loan. So you would take the sales price plus the renovations, and then you would have to put 3.5% down of those two numbers combined.
Gotcha.
All right. Another question. Can the homeowner do the work themselves?
The homeowner cannot do the work themselves. They must hire a licensed contractor or licensed and insured contractor to do the work.
That makes sense.
Yeah, that does make sense. They want to be sure it's done right and by licensed people. And then what about investment or second homes?
You cannot use it for an investment or a second home.
Okay.
FHA only lends on primary residences, so when they're giving you the loan, the intent has to be for you to live in the property.
All right.
That makes sense.
Mm-hmm. And then multifamily?
You can do multifamilies. You can do up to 4 units as long as you are going to be living in one of the units in the structure.
Right.
Then the loan would apply. We do a lot of 2 or 3Ks on properties like in the Wildwoods because there's so many multifamily homes there. It's a great way to get a starter home and have an instant rental income and have a fully refurbished home.
A great way to get into the investment business,
Right.
Yes.
as a homeowner.
Absolutely.
By living in one and then renting the others, and then you'll have the money to also to fix it up. So that's great.
These loans, generally speaking, the consumers usually get them for cheaper because the properties obviously need some work, and they usually have instant equity in the homes once they're finished.
Wow.
Is there a difference in interest as far as say like a conventional versus the 203K?
Yes, 2 or 3Ks do have a higher interest rate than what a regular FHA loan would have.
Okay.
FHA, though, has a thing called a streamlined refinance, which allows you to refinance, as long as the rate is being lowered. FHA lets you refinance it without an appraisal, without a bunch of additional costs. It's called an FHA streamlined refinance. And after 6 months, we usually do an evaluation on the loan to see if it makes sense to refinance it at that time.
After
Obviously,
6 months, wow.
Yeah.
Okay.
Wow.
So we get them out of the K as fast as possible if prevailing interest rates make sense to do
Okay.
so.
All right.
That's great.
Yeah, great information.
Yeah.
It is.
Yeah.
Very useful information for anyone that's looking to, update their primary home, start an investment property. It's just a great way to go.
It is.
Yeah, they're good loans. We usually always have a couple in the pipeline at any given time.
All right.
That's great. And just for a question, Doug, how long have you been doing mortgages now?
I have been doing mortgages since
Since 5
since the mid '90s, I think.
That's
Yeah.
great. So he's seen it
Long
all.
time, yeah.
He has seen it all.
Way longer than I thought I'd be.
But you're very good, and that's why you're still in it. That's why you're still in it.
It's all
We've
good.
relied on Doug quite a bit, and he's great. He's great.
Yes. Well, thank you for your time. Thank you for joining us and sharing this information. I am Victoria Goodwin, and you can reach me at KateMayDreamHomes.com. And can you give the viewers your information?
Sure. I'm pretty certain I'm tagged on the feed here. You can reach out to me through Facebook, or if you want to give me a call, my number is 609-827-8688.
Thank you. And I'm Ann from Wycott City to Shore. You can reach me at KateMayHomes.com. And we here at Wycott City to Shore are willing to help you with all of your real estate needs. We really focus on our clients, and we're a good team here, so we'll take good care of you.
We will. And we have 2 offices to help you do that in the Villas, New Jersey, and our new office right here in Cape May, New Jersey.
Which we're at right now.
Yes, we are. Thank you for joining us.
Thank you. Please like and share.
Take care.